Commodity prices don't stop moving just because an exchange is closed. The Iran war in particular, we have seen that over the weekend or in European night hours, significant events can happen that influence the prices. Our goal is to increase transparency for those prices and provide our clients with the methods and possibilities for risk management that they need. Ultimately, that means being available whenever they need it as well. So we prepare ourselves for extended opening hours. 24/7 is certainly a long shot, but as an immediate next step, we plan to increase into the early European morning and later evening hours. We do that in very close alignment with our network of clearing members and clients to agree on each individual step to ensure that the risk management that we have built remains so sound and reliable as it has proven to be.
How have your clients reacted to recent market volatility?
The market has gone through this crisis in a very positive way, very strong and very resilient. Obviously, the events that we have seen in 2022, in particular in Europe, where we had a real physical supply crunch, coupled with extraordinary dryness across Europe and outages of power generation capacity, that was much worse. And at that time, it led to an increased level of resilience for the market overall. So this time in 2026, the market and all our clients were able to deal with the heightened volatility in a very good, positive, reliable manner.
Has record volume shifted client trading behavior or contract preferences?
EEX Group is the world's largest power exchange, and we particularly run the power derivatives and spot markets in Europe. And the power price is interesting because it incorporates so many different price influencing factors. We also run the natural gas, spot and derivatives markets and the environmental markets, and all of that leads to the price formation on power markets. So covering the whole range of those markets and products together is really good for our clients to have. We've seen the heightened volatility across all of those markets. And that is why we are particularly proud that the risk management layer, together with our clearing members and the clients, has worked so well throughout this crisis.
What is the status of your portfolio margining model?
Margin efficiency is a core topic for our clients, and that's not only since 2022 or the recent crisis in 2026. It has been a factor since the energy markets continue to grow with the current pace. In particular, looking at it from a portfolio perspective, the cross-margining across asset classes and considering all these portfolio effects has become of increasing importance for our clients, which is why we have decided to invest into portfolio margining way before those crises. It is very important for us to roll out any changes to our risk management framework in very close alignment with our clients. We got the full regulatory approval for the changes they are intended to make, and now we're in the process of doing the technical implementation. We've announced that starting in Q3 this year, we will offer our clients the possibility to test the new portfolio margining system, and when everyone is ready, we will move fully over to that new approach.
What testing is underway?
We're doing it in a phased approach as well. So very early on in the project, we did some exemplary calculations how typical portfolios would behave under the new risk management methodology. It was particularly interesting to see how the new model would have behaved under the heightened volatility that we've seen throughout March. And I'm happy to say that the new model has proven very resilient here as well. It actually did behave as we expected to. Overall, we see a reduction in margin requirements, but they are held then in the accounts where they are most relevant. So it's very tailored to the actual risk that clients have. We also have taken care of the anti-pro-cyclicality arrangements that we need to do. The new model is showing quite strong improvements above the previous model that we have applied. Now, when we make the new system available starting in the third quarter, then all our clients can do their own calculations and as-if analysis with their own portfolios, which will increase the further trust in that model, of course.
Has the geopolitical conflict changed your strategy or demand for renewables?
It has not changed our thinking. Actually, we feel we have proven right. It's quite obvious that a reliance on fossil fuels only is not only economically a bad thing to do and short-sighted from a sustainability and climate perspective, it's also dangerous in terms of resilience and geopolitical stability. So any investments into renewables be it generation facilities, be it infrastructure for transportation of electricity, or even the market, increasing the trading volumes to further integrate varieties of players into that market is the right thing to do. I would even say it's a no-regret move. The power market is a core pillar for that, and we are proud that as EEX Group we provide by far the largest liquidity pool that we intend to further grow in the coming years.
How are you adapting contract designs to handle the unpredictability of renewable energy?
We have constantly enhanced our product portfolio to cater for the needs specifically of renewable energy generators. That's why we increased the number of products tradable at the short end of the curve, but we have also invested into the capabilities of the intraday market in power, which is already 24/7 and very algorithmically driven. Going forward, that will be even more important to continue that path, but it's not just the renewable generators, it's also the variety, the heterogeneity of players that are active in the market, like battery providers, flexibility providers, even industrial consumers who have flexibility in their demand curve. Those all need to be brought together into a large liquidity pool so that we can really reap the benefits of that liquid market. That comes all down to clearing, risk management and physical settlement of power and also natural gas contracts, to which our clearinghouse European Commodity Clearing is a true expert.